In this video, we're gonna look at Forex trading like the banks, breaking down exactly what they do when they're gonna execute a trade, looking fundamentally to technically, giving you an example and a trade idea with GBP USD. Let's jump straight into this one. Baby, I'm back again. I'm gonna keep doing that. The FX freak is back. Guys, so a lot of value in this video to come. As I said, I wanna show you, break things down, exactly how banks look to trade Forex. You know, all the things they're digesting before they execute that trade. We're gonna look fundamentally and technically together now, and we're gonna get onto a GBP USD trade idea and prediction, just like the banks. I'm sure they may have this trade running themselves already, but there's still an opportunity for us to make some pips with this one. So make sure you watch this full video because it's gonna be dropped in there in terms of that trade idea. Now, before we progress with this video, guys, you know I love adding value. I don't feel any sense of purpose unless I wake up and I'm adding value. I'm thinking, how do I add value to the community and share my knowledge? Remember, power is gained sharing knowledge, you know, not hoarding it. So please do, it incentivizes me. Smash up that like button and that subscribe button. I also want you to share this out. If you do follow me on Instagram, share this on your Instagram story, tag me so I can repost your story to let me know that you guys are watching and you're finding this of value. And I hope, I was just about to reach my notepad, but it's underneath the camera, so I didn't want to knock the camera down, but I hope you are taking some photo notes. Now, let's jump straight into this video. First things first, as you can see here with GBP USD, you can see that on my chart, we've been heavily trending to the downside for months. Right, for months, since June 2021. Now, before we get on to breaking this down, I just want to speak to you with regards to what exactly Forex banks or banks are doing, excuse me, when they are trading Forex. And obviously they trade a variety of other industries. First thing they're doing, and you guys know, obviously I am a heavy fundamentalist. I like to keep up to date with what's going on across all the markets, not necessarily just things that I'm trading, but things that I may not necessarily be trading in terms of news flow will still be impacted by what I'm looking at in the market. So it's just key to just have that overall picture, right, of just some understanding. So banks, what they're doing, they're digesting everything. Remember I mentioned in my last video, they're digesting things, not just technically. They're firstly, by the way, guys, they're looking economically, politically, and geopolitically around any currency that they are exposed to or they're looking to trade. They're understanding what's going on behind that. So whether it's the Eurozone for Euro, whether it's the UK for GP, whether it's the United States for the dollar, they're looking at these things. So in this example, we're gonna break down something now that I know the banks are looking at and I know they're gonna be executing a trade. If not, they haven't already. We're looking at GBP USD. So in this case, of course, we're looking at the UK economy versus the United States of America. So here, we know the pound's been trending to the downside, as I mentioned, since the middle of year of 2021. Now, the reason for this outperformance of this, remember, this is dollar strength. The outperformance here for the greenback comes because, remember, we're driven by interest rates. You know, what's going on in the economy, but then what's the respective central bank doing? Because interest rates, as a foreign investor, right, say you live in Europe, right, and you've got a lot of cash, you're an investor, you want to invest in the United States or invest in the UK, you want to see who's offering the highest interest rates. So central banks, remember, they're setting interest rates. So where we know the FOMC, the Central Bank of the United States, have been raising interest rates and communicating to the market, we're going to keep raising aggressively. The dollar has been strengthening because it's going to attract foreign investors. It's going to be demand for dollars. People are going to sell their currencies and invest in, if they want to invest in the United States, in America, because interest rates are rising, they need dollars. So that's why we're seeing outperformance and demand for dollars. The strength of the dollar is going up, and it has been versus the pound because the FOMC have been raising and largely communicating to the markets that they're going to keep doing that aggressively. So that's why the pound has lost a lot of ground versus the dollar. Now, sorry to just, before we look technically here, I want to make you aware, last week, now this is me with my fundamental cap on, and this is me with thinking how the banks are thinking, how the institution's looking to trade now. This, you see how excited I'm pumped I get talking about this stuff because I love finding opportunities when fundamentals and technicals go hand in hand. It's beautiful. What did I mention in that last trade prediction in dollar yen? Got it right, didn't we? Because we're looking at the fundamentals, we're looking at the technicals. So here, look at UK inflation. Inflation in the United Kingdom is rising. So inflation's rising. The prices of goods and services are going through the roof right now. People, as affordability is dropping because the wages, what people are getting paid in the UK, we need dollar bills, y'all. What people are getting paid is getting outstripped by rising prices. So people just have zero affordability right now in the United Kingdom. Look at the rate at which inflation's rising, right? 9% here, jumped up from the previous 7%. Look at the retail price index, you know, retail prices, 11.1%. Jumping up from 9%, so incredibly rising here. And we had the report here as published in the House of Commons in the United Kingdom, inflation rising to a 40-year high. My goodness, look here on the chart, 40 years. It's worrying. So how do we tackle this? A central bank has to raise interest rates to try and cool down inflation, because when we're effectively raising interest rates, we're cooling down spending, so on and so forth. So prices should start coming down gradually. So now the banks are thinking the central bank of the UK, the Bank of England, need to raise rates to try and cool down inflation. Now, what's going to happen to the pound? Remember what I just said, what happened with the dollar? Yes. So if the Bank of England start raising, which we're expected they need to pull their fingers out of their bums, excuse that, they need to raise interest rates. So that's what the markets are now starting to anticipate. Now let's look at GU. See, we hit a big top area here at 142. First thing I'm going to do actually is just mark up this trend line, because it's valid, it's there or thereabouts valid. We've got this key trend line here on the monthly. You know, when we're marking up trend lines, by the way, guys, it's always subjective, okay? It's always subjective. So whether you mark it from the body of the candlestick, whether you mark it to the wick. But here, this is there or thereabouts accurate, right? We can see this valid taps here supporting the GU to the upside. So we've seen a reversal there, on the, potentially a big bounce. On the monthly, what we're looking to form here is now it's a bit of a reversal candlestick. We could start seeing a bit of a hammer, a bit of a reversal doji candlestick to indicate a change in trend. Like here, look, you know, reversal candlestick. You know, reversal candlestick, we left a wick there. So it looks like we're going to form one here. All right. So that's the first thing I've noticed on looking from a technical perspective, but also how we've come up to this big demand zone. Look at here. We've bounced in this big demand zone, 122. Look how many times we've bounced there. Man, I preach this all the time. Look left. Look left, the data is there to be taken. It's there to grab it with both your hands. And look there, it's our cheat sheet. So we've seen a bounce there, a couple of confluences as I've just explained. Probably gonna get a third one with that potential candlestick on a monthly. See how that closes. On the weekly, yeah, nice reversal candlestick here as well. Bit of a morning star. Remember, our morning stars appear at the bottom of the trend to indicate a shift to the upside. So that's what we're seeing. Now what we need to do is break down this weekly resistance around this 126 area, but I'm already interested in longs here, okay? Because we've got what we could look at as an inverse head and shoulders. Look, left shoulder, head, and this bit of a right shoulder here. We're at that neckline, okay? Again, subjective, but this is what I'm viewing. I'm viewing that we've broken out of this sort of narrowing pennant structure here. Look at this, bit of a pennant there, breaking out of a range regardless, all right? And we just need to take out this 126 area. If you look here on a 4 hour, you can see obviously that nice break of that range. So for me, what I'm now looking at and what the banks are looking at is a return to a big psychological area. When we look at big psychological areas, I'm talking about round numbers, you know, your double O's, your 50s. And now I'm looking at 130. I know when we've bounced off this trend line before, we've easily gone to 130. Look, easily gone to 130. Sometimes, of course, we kill that and we smash through. But easily, we're looking at as a reserve target there and going for 130 on the nose. Now, just for the sake of this video, right, and it comes down to you, please don't take this as financial advice, but just my opinion, just for the sake of this video, even longs from this current area, right, around, let's just say, around 126.20, for me, I'd leave a nice bit of breathing room below this pennant and below this demand zone, okay? Here, look where we've been ranging and we found support, this pennant here. So I'd leave a bit of breathing room below this pennant, 150 pips, and then I'll be running my targets all the way to that cycle of just shy, you know, let's say 129.90, decent RR, so we can even extend our stop loss just for a little bit more breathing room. Remember as well, I like to preach that, you know, it's better to be in the market. It's better to be in the market and the market go against you a little bit before it goes in your favor. Because there's times probably when you're trading too big position size, right? I know you're trying to grow that account, I know, but risk management, you're trading too big a position size, and because you don't have a decent stop loss in case of excessive wicks to the downside, short-lived wicks, you know, you're getting taken out and then it's going in your direction. So accommodate for that. Take this long-term view, bring down that trade size and potentially take a more longer term view on a trade like this. So this is my trade idea, my prediction here for GU. I do expect us to hit that 130. I've given you the fundamental reasons there. I've given you the technical reasons. Guys, please do smash up that like button and subscribe button if you want more. Also tag me in your Instagram stories. I will repost. It will incentivize me to carry on producing more value. Bear in mind, I haven't even scratched the surface yet of the knowledge up here. Stay lit, stay blessed. Let's get it.